Hello everyone. Do not invest more than 25% of your savings into stock market. Wait for at least 5 years for a better return from stock market. Today we will be exploring about impact of RBI rate hike. Due to the Ukraine war, we are facing price hikes in crude oil, commodity and edible oils. These three are the important items contributing to India's inflation number. Previously, Fed has announced its rate hikes. Now, RBI has announced 40 bips repo rate hike. At this point of time, this RBI rate hike will help us to reduce the inflation in our market, and it will also help us to slow down the outflow from other markets like debt markets, bond markets because of Fed action. On the other hand, this 40 bips rate hike will be passed on through the customer and EMI cost will also increase. This will directly affect the retail loans and MSME sector. Now EMI is going to be costlier. In case of MSME sector, cost of interest is dominating the major portion of their earnings. Liquidity and high availability of credit is the important factor of MSME to grow their business. Some uncertainty has come in. One has to be very selective in choosing the stocks. RBI has announced the rates of RBI has reduced the rates of around 1.15% between the period February 2020 to May 2020. It has come down from 5.15 to 4. Now there is a surprise rate hike of 40 bips by RBI. It is better we can expect that RBI will take out this 1.15% stimulus in coming 3 policy meetings. Nasdaq lost more than 20% from its March 2022 high. It lost 32% from its all-time high. It is a very volatile market. Indian VIX is standing at 21. Generally below 20 is considered to be a stable and stress-free market. Globally, economies are slowing down and central banks are raising rates to tackle inflation. As we know, US Fed is starting to reduce its balance sheet starting from June. It is going to be a tough period when this liquidity tightening is happening. India is placed in a good state from the perspective of economics. There might be a minor slippage on growth, but we are already in a very high valuation and we might not be seeing the price increase in stocks. This probability of markets going in sideways or going down is much higher in a current situation. Normally, during inflationary period, commodity, real sectors, energy will tend to do well. Even financials can also do well because of rate hikes. At the same time, our financials are badly hit by high level of foreign institutional investors selling over last 12 months. I am not the SEBI registered advisor. This discussion is just for educational purpose. The insights that I gained from various other news articles. Thanks for joining with me. This is Jay from EST, Economics, Stocks and Trades.